Big breaking news, Federal Reserve Chairman Jerome Powell just gave a pretty big speech at the Chicago Fed this morning. Jay Powell clearly is trying to pull out all the stops to make sure that whatever happens, stocks do not go down. We're about 7% or so below all-time highs for the S&P right now, and that is simply unacceptable, according to Powell, because no matter what happens, stocks cannot go down. That is the number one top priority of the Fed all day, every day of the year. And so the big headline out of this speech is that Powell says that the Fed will act as appropriate to sustain the expansion. The Fed will stop at nothing to make sure that stocks go up and up and up every day. Because that's really the only metric of the economy that they care about. Yes, they care about unemployment and inflation, but the government has ways of manipulating those numbers to make them seem different than how they are. You know, for example, if people give up on looking for work, they're not counted as unemployed. The inflation thing, it's based on a basket of goods. They can manipulate what prices they're looking at, and they can make inflation not seem nearly as bad as it is. And of course, the whole idea of measuring inflation as a bit of a sidebar is kind of hooey, since inflation is a non-uniform phenomenon. Prices are affected differently by monetary expansion. So when you print money, you're going to see a greater inflation in the price of, say, housing than you will the price of corn. And so trying to come up with this aggregate metric for measuring inflation really isn't that great of a deal. However, the one metric that the Fed has that they don't claim that they use, but they really is the only one they care about, is the S&P 500. And that number is raw, unfiltered, although heavily distorted by Fed action. And so in that case, what does acting as appropriate entail? For one thing, it definitely includes rate cuts, which most mainstream outlets seem to be expecting that now. Now, I know a couple months ago that it was totally taboo to say that rate cuts were coming, and that only stupid people would say such a thing. All the smart people knew that the Fed was going to have probably still 2 rate hikes this year, even though the rate hikes were going to be slowed. That, of course, as I said all along, did not materialize. The Fed, in fact, will cut rates. That is imminent. Jerome Powell signaled just as much today. Rate cuts really are the bare minimum, and he said he was even more dovish today than, frankly, I would have expected, because not only did he say that rate cuts are coming, that rates are pretty much going to go back to zero, but he also alluded to the possibility of negative interest rates. Powell lamented that, with rates being so close to zero as they are currently, just cutting back to zero isn't that big of a rate cut. If you think about it, what is that, 250 basis points? If the economy goes into a recession, a 250 basis point cut, 2.5% or 2.25%, whatever it's at now, they cut that back to zero. That's not that much stimulus compared to what they're already getting, because the market's getting juiced so hard as it is. It is worse than a heroin addiction. So therefore, in order to have truly low rates, you're going to have to go to negative interest rates. That's the only way that you could cut, say, 5-6%. Now, of course, negative interest rates are one of the policies that I fear the most personally, because that means that people will actually be it will cost them money to keep money in the bank. And that, of course, does not at all incentivize people to actually try and save their money. So poor people who don't have much to begin with are going to spend every dime they make if they don't already, and there's no incentive for them to not do that. And of course, if you spend every dime you make, you're never going to accumulate any wealth. You can't invest that back into anything like, say, saving for a down payment on a house. Nobody's going to do that if sticking your money in the bank just gets it sapped away from you. And of course, if they're poor, they're not going to want to keep the money under their mattress because they probably don't live in the best neighborhood. This means that ordinary people really will have no way of keeping their money around. Of course, as it is, we already have negative real interest rates. Inflation is higher than what you get paid on a savings account by quite a bit. So you do lose money every year even by the standard Fed inflation metric, which, like I said, is not really accurate. But what Powell's talking about is even more sinister. He wants negative nominal interest rates, meaning that the real negative rate will be far higher, or I guess lower, since it's negative. Now, one of the spookiest lines, I think, in the whole speech was that Powell basically said that the unconventional tools used by the Fed during the last crisis can't really be considered unconventional anymore. They are, in fact, conventional and will probably have to be used in the future. Now, if I'm going to unscramble that and translate that into human speak, what Powell basically said is that QE4, the next round of quantitative easing, that is on its way, and it is pretty much imminent. It all depends on how the stock market does. If the stock market goes down and the Fed cuts rates and then it goes back up, well, then that'll be fine. But if the stock market goes down, the Fed cuts rates, and they can't do that, they go to negative rates, that doesn't work, well, QE4 is coming back out. The Fed probably at this rate, considering that the unconventional policies or tools of used during the last crisis are now conventional, that opens the door to introduce new unconventional tools. What that means is you'll probably see the Fed in the next crisis directly just buying up stocks, probably just shares of ETFs. So you'll see the Fed owning SPY and QQQ. Now, there is a downside, however, for the stock bros, as happy as they may be hearing Powell's good news that he wants basically to do everything he can to make sure that they make money. Typically, if the Fed is signaling that they're ready to cut rates, that means that the Fed thinks that there's a problem in the economy and that there is a risk of recession. And of course then, so if the Fed is talking about cutting rates, then everybody else now knows that the Fed is expecting some sort of a downturn. Because if things were not getting worse for the economy rather than better, why of course would you need to cut rates? And so some would argue that this could be a self-fulfilling prophecy. However, I think that the Fed waits until they see the whites of the recession's eyes before they ever make a move. So rather than being a self-fulfilling prophecy, it's more like a very last-minute wake-up call for folks. Because pretty much every time that you've seen a central bank start to cut rates, that's right before a recession. So if the Fed cuts rates at the next meeting, which is coming up, if they decide to cut, who knows, 1%, or hell, all the way back to zero, though I'm not so sure that they'll cut back to zero that quick. But let's say they cut 1%. We very well may be in a recession by the end of the year, in which case that doesn't give the economy much time to try and turn around before the 2020 election. And if this next recession is, in fact, as I expect, going to be worse than the 2008 recession, once we get into the summer of 2020 again, President Trump may start to get desperate, and that's when he'll be a cornered animal, and you'll really have to worry about him with respect to the wars and things, as I've covered in other videos. So we'll have to see where ultra dove Fed Chairman Powell goes. If you gained anything of value out of this video, I'd appreciate you clicking that like button and subscribing. And if you do subscribe, please do click the bell, because I do upload every day and I'd hate to have you miss one. So I'll see you back here in the next one.